Howdy there, folks. Welcome into today's video. My gosh, do we have a lot to get into in this one, folks. So many stocks to talk about, so many things in the market going on. I want to share some perspectives out there, some opportunities out there. Yeah, it's going to be an action-packed video. Thank you, every single person that subscribed to the channel. I appreciate each and every one of you. And let's just get straight into this, folks, okay? Obviously, massive risk on day to day. I mean, it's clear as day. When I pull up my stocks, I personally have money in, and I see the stocks that are really performing, and almost all of them are what are seen as riskier plays, right? When I see those ones performing like that, it's clear as day we're in a massive risk on day like today, right? You look at a stock like Fubo, 14% plus move there. Planet, 8% plus move. Oatly, 7%. Tesla, 7%. Even the Chef's catching a bid today. Holy smokers, that's no jokers, right? Foot Locker basically gained back everything it lost yesterday. Everything that stock lost yesterday on earnings, it gained back here today, right? Palantir with a nice move up here today, 4% plus. Shopify, 4% plus, right? And so it's very clear that we're risk on a day like today, right? Public count today, $47,000 up. I took this screenshot like an hour before the market closed, so we might have cracked $50,000 in that portfolio. A day like that screams risk on. When that portfolio does that dang well, yeah, we're screaming risk on. You even look at something like Bitcoin, right? Bitcoin, the highest close right now since June. Well, technically Bitcoin never closes, right? It's not like the stock market, but in terms of where it's trading, the highest we've seen since June 2022 now at this point in time, right? Which definitely says risk on, but there also could be another component with Bitcoin. In my opinion, there's two components, right? One is risk on. The other component is people looking to put money somewhere, right? And, the way a lot of people view this with uncertainty going on, bank runs, all that stuff, some people say, I need to put money other places, right? And so the younger generation always looks to Bitcoin, or at least a lot of them look to Bitcoin. The older generation looks to gold. And if you look at gold, obviously gold's been performing, except for today, had been performing very, very well, especially with all the bank runs going on and whatnot. When you have that level of uncertainty in the market, a lot of, especially, let's call it maybe the baby boomer generation and whatnot, a lot of those folks definitely flock to gold and silver in those times, but specifically gold. And so there's a lot of inflows that happen to gold. Younger generation definitely goes more to Bitcoin in a situation like that, right? Even First Republic Bank here today caught a bid. This stock was up 30+% here today. First Republic Bank. That just goes to show you how risk on the market really wanted to go today when that baby. But look at this. I want to show you this because this is so important for everybody watching this right now, okay? This is my big tech watch list. If you want to add your big tech watch list to be the same as mine, you're more than welcome to, right? This is my big tech watch list, right? And look at the stocks that overperformed today. Tesla, Shopify, PayPal, Snowflake. Those are usually seen as the riskier plays of big tech. That's just the way it is, right? And then you look at the stocks that are really lagging today. Microsoft, Apple, those are usually seen as the safe money plays, right? If I'm looking to hide out somewhere, people look at those type of stocks as I'm going to hide out in Apple, I'm going to hide out money in Microsoft, right? When they're saying they're feeling confident about the market, they flood more money to these sorts of stocks, right? So this goes to show you really how much of a divergence there is in a market and how risk on this market really wanted to go. Where these people, if anything, there might have been outflows out of some of these stocks today, right? Because, I mean, these stocks couldn't even keep up with the market. That's pretty interesting there, right? Now, shorts are not happy about a few stocks. And we got to talk about these stocks specifically. One is Coinbase, okay? If you have not been keeping track at home, Coinbase is up at roughly 150% this year. We're not even through 3 months this year. That's incredible, right? Like think about that for a moment. We're a little over 2.5 months into this year, and this baby is up 150%, right? Shorts are not happy about this. A lot of shorts have either been short selling the stock, buying short-term put options on the stock, hoping it goes down in some substantial way, right? Some that are dated out a few days, some that are dated out a few weeks, some that are dated out a few months, right? And like, this has to go down. This is ridiculous. This is rallying so much, okay? And I just don't understand why even it is worth somebody's time and attention to try to short stocks like this or buy put options. Because the bottom line is, you went into this year, this stock had already been kicked, okay? So you went into this year and the stock was already down, 80%, 90% from highs. So you're trying to squeeze the last few squeezes out of this lemon, okay? On the flip side of this, if you have any bullish momentum, it's going to be huge for Coinbase, right? What have we had so far this year? Some bullish momentum coming in Bitcoin. Guess what that helps? Coinbase. And the last component of this, I don't think a lot of these short sellers or folks consider, is let's say I wanted to go buy Bitcoin and Ethereum, okay? Who am I going to do it with? Coinbase. Like almost all their competition got eliminated. Like who's Coinbase's competition? Binance? I don't even know if Binance, if we have one more major, let's call it a bear market in crypto, that maybe Binance is the next FTX, right? I'm not putting my money there. So now at this point in time, there's basically no competition for Coinbase. And so if an average person wants to go buy cryptos, right, they're more than likely going to set up a Coinbase account. And now they almost have like a, I don't want to say a monopoly, but because everybody went under, it's like now if you want to buy Bitcoin, Ethereum, and a bunch of other cryptos, you're more than likely going to go to Coinbase. And so that's an interesting dynamic there, that basically they're one of the only ones that actually survived this situation, maybe the only one that folks, at least in the United States, trust. That's an interesting situation there, right? NVIDIA, this stock is so frustrating to bears right now. They keep trying to short this stock. They keep trying to buy puts on this stock, right? And they keep saying it's ridiculous, right? And even one of my favorite YouTubers even made a whole video about NVIDIA last night, right? And it's a very frustrating stock for folks, right? It's up almost 84% this year, right? And they're like, it has to go down. They're getting so upset, right? I wish just people thought about these things a little deeper, because here you have a company like NVIDIA, right? This company is trading at a 57 forward P. Now, the way to think about that, and this is extremely important, you pay attention right now on the most heavy level you possibly can, okay? Because what I'm about to explain is so vital, okay? This forward P NVIDIA is trading at is about 3x the stock market, okay? So what a lot of bears, or if you're on the fundamental side and looking at it from the bear standpoint, you might say that's ridiculous. That stock should not be trading at 3x the average forward P. But think about this for a moment. If you had to bet your life on it, would you bet that NVIDIA is going to at least 3x the net income of the average company in the S&P 500, or less than that? I would say most people that are educated out there would say, you know what, I think there's a high probability NVIDIA at least 3x's the average S&P 500 company over the next 5 years or 10 years, right? And there's a possibility it could be a 4x, a 5x, a 10x of the net income growth for NVIDIA versus the average S&P 500 company. So when you look at it from that context, is NVIDIA really that expensive? And this is where, unfortunately, you have to think a little deeper, right? And that's uncomfortable for a lot of folks. They want to think very simple, right? They want to just say, that's trading way above this number, so therefore it's overvalued, therefore it's a ripoff, therefore it's not the way this game works, okay? That's not the way this game's works. It's never been that way. It never will be that way, folks. We're looking out to the future. You look at a stock like Tesla. Oh my gosh, this is a stock that's frustrated short sellers and bears for 5 years now, right? Actually, probably 10 years, to be quite honest, okay? But in terms of mass fame, certainly the last 5 years, right? You look at a stock like Tesla, right? It trades at about a 47 forward PE. So a little over 2x what the market trades at. But let me ask you this. Do you think Tesla's going to at least 2x net income growth of the average company over the next 5 years? More than likely, right? And more than likely it's going to be dramatically more than 2x the growth of the average company over the next 5 years, which all of a sudden, it makes Tesla actually not that expensive. And you could make an argument that Tesla's actually significantly discounted here. Because if you believe Tesla's going to, let's say, 5x, right? 5x the net income growth of the average company, then it should be trading at about a 5x premium. If you feel like it's going to 10x the average net income growth of an average company over the next 5 years, then it should be trading at about 10x the market, which would mean this company should be trading at about a 200 forward P in that situation, right? And so it really depends on what your numbers are there. These are very, very important things. And the problem is bears many times don't dig into the numbers like that and run projections for these companies. They're not looking from that level, right? And so this is something that I think needs to be taken into account, but just short sellers and bears, they don't take this stuff into account, and it causes them pain. And I mean massive, massive pain in the market. Now, folks, it is important we have to consider something. We have to consider the possibility that we have started a new bull market. Does not mean for sure it's happened, but we have to at least consider it. What I am seeing out there continually, and this is even from bulls and bears, I don't even see anybody considering this. And the reason they're not considering this, in my opinion, is because there's still so much uncertainty in the market. You still got the bank run situations that's fresh in everybody's mind. You got the Fed. Are they going to, we'll talk about the Fed later in this video. Are they going to start, cutting rates? Are they going to, potentially stop raising rates? All that, right? You have that uncertainty. You continue to just have this recessionary talk, right? That adds uncertainty. You have CEOs that are confused out there on what the future is. They're uncertain. And so all this mass uncertainty is, I think, kind of blinding people like a massive amount of thick fog in front of them that they can't even consider the possibility. Now, we might have started in the new bull market over the past several months here, okay? Now, you don't have to be a technical expert to understand a triple bottom, okay? A triple bottom is when a stock or potentially an index bottoms right around the same range 3 times, okay? And when you get a triple bottom, it's almost always a extremely bullish indicator, right? And so if you look at it from that standpoint, we've triple bottomed this market several times in October, November, and December, and we've started to move up, and we've shown, obviously good strength in that area every single time. So here's the thing. If this market continues to rally, continues to do well over the next several months, when are we going to start to consider that maybe we started a new bull market? I think it's important we just at least consider it, right? You don't have to be on 100% of the belief that, yes, 100% we started the new bull market. But you should at least be considering that is a possibility now at this point in time, okay? Now, Jerome Powell in the Fed, okay? Talk about this for a moment. I even went onto Google, I just typed in Jerome Powell, right? It is interesting how much pressure there is on this man to stop raising rates or potentially cut rates. I mean, just read the headlines of when I typed in on Google, top stories, Jerome Powell. Will the Fed raise interest rates during a banking crisis? The way that's already framed is from a negative perspective of he shouldn't raise because we're in a banking crisis right now, right? Wall Street Journal, mistakes the Fed keeps making. Obviously negative, right? Fed rates, projections, stability concerns, a mess to be sorted. If you got a mess to be sorted, then it sounds like you shouldn't be raising rates from that frame, right? Elizabeth Warren is right. Jerome Powell should be held accountable. Warren calls for the investigation into the Fed, says Jerome Powell has failed. So there's massive pressure on Jerome Powell. And I really thought this wouldn't come till the summertime. I knew politicians, the media, everybody the market in general was going to come out against him and try to force him to stop raising rates or start cutting rates. But I really thought it would be in the summertime. I did not expect it to happen in the spring. So we're ahead of schedule on this. We're ahead of schedule, folks. And that's very, very intriguing, right? Now, even from somebody like Bill Ackman, right? Bill Ackman says the Federal Reserve should pause on Wednesday. He says they should not raise rates, right? Elon Musk took the most dramatic stance of anybody I've seen in regards to Fed. Elon Musk, holy smokers, this ain't no jokers. Elon Musk says the Fed needs to drop rates by at least 50 basis points on Wednesday. You gotta be flipping my flapjacks. Holy smokers, that's the most aggressive. I haven't heard anybody say that. I mean literally anybody. I've heard countless people say, they should raise 25 or they shouldn't raise. I haven't heard really anybody say they should cut. And I certainly haven't heard anybody say they should cut by 50 basis points. That's a dramatic comment from Elon Musk there. Wow, okay, wow. Now, by the way, I was on Twitter because I was looking at those tweets, and literally then I saw that, T-Man arrested, right? And so I was like, what the heck? And then I saw these photos, and I was like, what the heck? Did this actually happen? And I got suspicious when I saw the photo of him running there, and I was like, I don't know about that. And I'm like, why would he be even running out in public like that? That's ridiculous, right? And look at this. This is AI. AI is getting out of hand. Y'all got me. like that's crazy, right? AI literally can produce these photos that make it look like, oh my gosh, he was in this situation. That's crazy, man. That's crazy, right? Now, the Fed is in a between a rock and a hard place here, okay? Because here's the deal: if they raise rates, right, then that could potentially cause more banking chaos, right? More worries out there about, oh my gosh, the Fed's not done raising, there's all of this damage, and they want to keep raising rates. Oh my gosh, okay? So they have to worry about that and the stability of the financial system. But on the flip side, if they don't raise rates, it basically makes it look like they're done raising rates, and then maybe the market starts to fly, right? And if the market flies, there's worries about that potentially causing spikes of inflation, right? If the market starts to go back risk on again. So I say, like I said, the Fed is in between a rock and a hard place in this situation, right? The great news is inflation's coming down, and it's going to likely continue to come down for the next many, many months here. Trueflation has us at a 4%, 4.2% number right now. So inflation's been crashing. That's great. But we're still not to where the Fed wants to be. The Fed wants to be under 3%, okay? So, and obviously it's got to show up in their government numbers. They don't look at trueflation. I feel like this is a better gauge, in my personal opinion, than actually the government numbers, but they're going to look at government CPI. They need to see that government CPI under 3%, right? We're not there yet. And so that still has to play out over several months from now, right? Now, let's say personally, I was the, let's call it the Fed president, okay? I had Jerome Powell's job. Which thank goodness I don't. Thank goodness I don't, because I'm not really looking for that job, okay? But what would I do, okay? So here's my situation, right? I would not raise tomorrow. I would just keep rates the same. I wouldn't cut. I wouldn't do anything tomorrow in regards to that. But what I would do is if we hit threes in the CPI, I would start cutting rates this summer, right? Before you cause too much economic damage, right? Because we've been in a higher environment now for rates for a bit, especially compared to where we've been, right? And then if we go to the twos, I would cut to maybe a 2 to 2.5% Fed funds rate, and then let things kind of play out from there. That's what I would do in the fall time if I had his job. That's just my personal opinion on that, right? And in regards to this job, right, here's the thing, right? All these people complain about these politicians and Fed officials or whatever. And when you really look at their salaries, it's like, how are you supposed to attract super high level talent? You're basically looking for people that are going to kind of look at this as like a charity situation, right? I mean, you look at Jerome Powell. Did you know Jerome Powell, arguably the most powerful man in the world, one of them certainly, right? You know he makes $190,000 a year in salary for being at the Fed? Like think about how low of an amount of money that is, right? And let's say you really thought Jamie Dimon could do a great job at the Fed. Jamie Dimon has a net worth of $1.5 billion. Does he know the banking system inside and out? Yeah. Could he probably do a good job as Fed president? Probably. But why would he even consider that? It would be like a charity case for him. Literally. Like, are you kidding me? $190,000 a year? Lloyd Blankfein. He was a CEO of Goldman Sachs for many years, got them through the great financial crisis. He knows the banking system inside and out, from the commercial side to the investment side. He's connected with everybody, right? I'm sure he could probably do a great job as Fed president, probably better than most of them have done over time. Lloyd Blankfein's worth $1.1 billion. Why would he go take on all that stress and pressure to make $190,000 a year? Like, are you flipping my flapjacks? Like, why would that even be worth it in this situation, right? Especially when Lloyd Blankfein could go get a job making $30 million, $50 million a year tomorrow if he wanted to. Think about that for a moment, right? So what type of quality are you going to attract, right? This is Royce O'Neal. I've never heard of him. You've never heard of him. He plays basketball. No one knows who he is, okay? This man makes $9 million a year in salary. $9 million. And he's the 148th most paid basketball player. This guy's name is Cody Zeller. You've certainly never heard of him, and I certainly haven't either. Did you know this is the least paid NBA player I could find? He makes $519,000 salary? $517,000 salary, which is what, about almost 3x what Jerome Powell's salary is? So think about this for a moment, and think about like what are we attracting as our talent levels, right? Like, if we have super talented people, what would you rather go do? Would you rather go be a politician? Would you rather go, work for the Fed? Would you rather work in business or dribble a basketball? Think about that. So think about where our talented people really go. And so when people get frustrated at politicians, when people get frustrated at the Fed or any of these things, just understand we're not attracting our most talented people to those jobs. Not even close. And there's no disrespect to any of the politicians in office. There's no disrespect to the Fed. I'm just telling you, we're not going to be attracting our most talented people. We're not going to be attracting our smartest people. Bottom line. Because why would you go do that? Unless you're basically looking at it as a charity case. That's what you're looking at it as. Think about that for a moment, folks. And I think we got to completely, I know people don't want to see these either politicians or these folks that work in government make more money, but I'm just telling you, until you see those salaries go up like epically, you're not going to attract high-level talent, and it's just going to lead to more frustration out there because you're basically asking people that have crazy amounts of talent to do jobs that are charity work. Think about that for a moment, right? It's not a subject that's talked about, and I think it should be talked about, because it is important, right? Now, when I look out at the market right now, I certainly see a lot of opportunities everywhere. And so don't be blinded by kind of what's gone on here in the market recently, because you've got to understand there's still so many opportunities out there. There's countless stocks trading right now at 3-year lows, 5-year lows, 7-year lows. We're not talking about 52-week lows. We're talking about multi-year lows, okay? And so in this market, I look out there and I see opportunity all over the place. I see consumer sentiment that's getting better, thank goodness, okay? I see a situation lining up here where wages hopefully can get ahead of inflation, that should start to play out. I think that's something that's good, that absolutely we need, because if you're talking about what killed consumer sentiment to the worst consumer sentiment we've seen in history last year, it was the fact that people got wrecked, just to be quite frank, in terms of like what their paycheck was bringing in versus what inflation. It was way outstripping. You need people's wages to at least keep in line with, what it costs to just live on this planet, right? Whether that be rent or housing or food or all that stuff, right? If you can get wages a little bit ahead, that's when people start feeling really good about themselves, right? And they start feeling more confident, like, I'm making much more money, I have more money to save, I have more money to invest because, the cost of living is not going up nearly as much as my paycheck's going up. That's how you get in a great financial position. So we're getting closer to that place. I don't think we're quite there yet, but I think we're getting really, really close. And I think that's something to be pretty excited about, to be quite frank. And I'm happy for a lot of people out there because a lot of people, especially last year, I don't think we were able to take advantage of deals. One was fear that caused it, and the other was just the cost of living was outstripping what their wages was bringing in. So they had to either stop investing or invest very small amounts of money. And so I'm happy that we're going to get into more of an equilibrium here, and hopefully then wages can outstrip what the cost of living goes up, and that would be the ideal situation, because that's when you can talk about a truly expanding economy again on a real front. And let's hope that happens. We're starting to go that way, but you can't get too excited on this stuff. But there's certainly opportunities all over this market, and you've got to work with urgency out there, take advantage of deals out there. It's going to be a lot. There's so many stocks that are deals, and then if there's any more uncertainty in the market, it's just going to produce even more deals. But and just tell you got to work with urgency, man. Got to work with urgency. Look at what happened last year. Look at how much many of those stocks went down. And then look how much many of those stocks have gone up now. We're talking about the 50%, 100%, 150% gainers are all over this market now at this point in time. And we haven't even really gone full bullish mode when it comes to the NASDAQ, the Russell, the Dow, the S&P, any of that. All those are still down massively from where their peaks were. So just think about those moves that have happened there. And then think about a market that's going to be all-time highs again someday, whether that's next year, the year after, whatever, we're going to reach that again. And think about where many of these stocks will be at that time. If you think Tesla's topped all time, no, it hasn't. If you think Nvidia already reached its top, it hasn't. If you think any of these stocks have, if you think Meta hit its top, no, it hasn't. It has a long way to go. And so I think that's just food for thought out there, folks. There's a lot of opportunities all over this market. Make sure you're taking advantage of them. Do not hesitate when it comes to that, folks. Hope you enjoyed today's video. As always, I appreciate every single person that subscribed to the channel. Thanks for being here. If you're looking to join my Patreon and see the moves I'm up to in the market and support the channel, that's going to be pinned comment down there. Also, if you're looking to apply to join my private stock group, my private wealth group, learn directly from me and be part of all that and get access to everything, also check the description area for that as well. Much love and have a great day.